Hello once again. A quick one on USDCAD, which I think I need to call our attention to at this juncture in the market. The first thing I noticed was that we have a bearish trend line, which I identified started in the beginning of March. And if we look at what has been happening since the beginning of March, we notice that from this area in March, we had a significant supply zone, which was very, very solid, as it had how many rejection? We had one, two, and we had the third one here, which became the second point at which a price action touched the trend line, the bearish trend line to the downside. And if you look at what's happening here on the daily time frame, we notice that we had a very strong impulse leg after this rejection here. There was a strong impulse leg, and since price tested 1.24 200 area, we had a consolidation phase which sent price to the upside. And this upside, I assume, is will be a retracement of the impulse leg. Let me state that here. So the impulse leg is bearish, so we need to put it there so we can be on a clear note. So, um, with this said, now it appears we're having another supply zone around 1.265, which I highlighted here. Supply zone. Let me give this red and inside center. Okay, good. So I think we're having a supply zone around this 1.265 area. And why am I saying that? Remember I stated that an impulse leg, a bearish impulse leg, and price might be doing a retracement of that impulse leg to to meet that trend line, which will also share a confluence with the retracement, the culmination of the retracement. So if we look at if we pull out our Fibonacci retracement tool, we will notice that the price action is presently within our golden zone area, which I've always seen as between 786 and 50% retracement of any impulse leg. With this being said, I want to at this point in time take into cognizance this bearish trend line, which will be my guide going into the new week. So now, if we move down to a much lower time frame, let's say the 4 hours. Oh, before I move down to the 4 hours time frame, there is one more thing I noticed on the daily time frame. If we go back to the left hand side and look at what structure has been giving us around that 1.265 area, you will notice that this area has been a very significant point at every at any time price action comes into that area. And if you look at this okay, see three, these three areas, we saw that price was supported at that area, and at that point in time, we saw that price moved to the upside at those points in time, as you can see. And this gives me a clue into how strong that level is. And if we move on further, we'll notice that at this point we had a breakdown. At this point, we had a breakout at that same area, in January earlier this year, and following that point in time, we had multiple rejection of this area, which later on forms a solid demand zone for price action later on in the year. So if I label this area the demand zone, so will later become a strong demand zone later on in the year. And afterwards, in the middle of March, we had a significant breakout of that demand zone, which proves that buyers are actually not strong in this market with this significant breakdown, which sent price crashing down into 1.241 area. And if you look at where price is right now, price is right at that same key level, which, sorry, if you look at since that breakdown of that key level, price is right back at that area, which since the beginning of the month of April, we've had an indecision phase around this area, hereby giving us a clue into the indecision in the market, and at the same time explaining the significance of this area, and the fact that the participants in the market are actually not sure what's going to happen at this point in time, if price will probably break out of that trend line to the upside to give us a signal confirmation for a bullish momentum in the future, or probably price is going to do some rejection of this trend line to send price further down, considering the previous impulse leg we had earlier identified. So, because of the previous impulse leg we had is bearish, that's number one, and then number two, the bearish trend line we're looking at, and then if we look at what has been happening in the past, it appears price has been consolidating for some time, and anytime price gets to above 2.8, 1.28 area, we normally have a bearish momentum. And because of those three major points, I want to look at take a bearish perspective on this one. And before we do that, I would like to zoom back into. Oh, give me a moment. Sorry. I would like us to have to identify a key level at this point, and that key level will be well highlighted if we pull out our line chart. And bringing out our line chart, we'll notice that we have a significant key level at 1.265 area, which I'm going to draw a, a line on, and we'll paint it, we give it a gold color. Like I always say, our key level is always painted in gold. And sorry, give me a moment, please. Let me adjust this so that 1.265 area. So there we go. We have our key level at 1.265 area. And remember, our key level at 1.265 area. And remember, our key level will always be our guide into taking trading opportunities going forward. So let me move to the right hand side and let me make this a little bit thicker. So now that we've identified a key level at this point in time, it's now appropriate that we move to a much lower time frame to see what is actually happening in price action. So if we move down to the daily time frame, it's quite clear that the indecision phase, which I highlighted earlier, as you can see, the indecision phase around this area is forming what I want to call a reversal structure, as we had a breakdown of 1.259 here, and price went back into this key this key level area and rejected it like three good times, hereby giving us a sign that the sellers are actually strong at this juncture in the market. That's number one. Then number two, if I pull out my line chart, I identify that there is a trend line within the supply zone identified on the 4 hours time frame, which also give us further clue into a bearish momentum on this chart right now. So with this supply zone identified here and a key level identified 1.265, then we might be thinking of taking a trade based on these conditions identified. So moving on to a much lower time frame, which is the 1 hour time frame, I want to have actually placed a pending order at let me pull out my live position, right? My live position. Okay, I have it here, here, here. So I already had a pending order at 1.26. Sorry, 26, 145 and 1.26050, where I'm expecting price to strike through this area with my stop loss right above this key level at approximately 40 pips thereabout. So I'm looking at an approximately of 110 pips thereabout on this trade. However, this being stated, I it's very pertinent I state here that a break above this key level could send price going to the upside. So whatever we want to be looking at on from this trade is something anywhere below this key level is good for us to actually sell the US dollar against the Canadian dollar. And if we look at the way the oil price has been moving lately, we notice that the Canadian dollar, considering the fact that the currency of the Canadian dollar is very relative to the oil commodity market. So we might be looking at a potential rise in the Canadian dollar in the next couple of days. So I would like to pause the video here and let us see how price action reacts, and whatever happens, I shall give you an update in the comment section on my trading view um, account. So in this regard, I wish you a wonderful night rest and good night.